Good afternoon and welcome everyone to today's panel on blockchain and the emerging crypto industry. My name is Leeor Groen and it's a pleasure to host our discussion today with such a wide group of people from around the world. Just by way of background, I'm a principal at BVV, which is a Swiss Singaporean investor and M&A boutique fully dedicated to blockchain and the emerging industry around it. And I am glad to be joined here with some of the leading industry experts from around the world. Really, literally, we have Australia, Singapore, Hong Kong, Switzerland and the US all represented on the call today. So thank you everyone for making the time and the schedule work here on Monday. So as we all know, blockchain is a technological, financial and legal innovation. And I think coming at it from all of those different angles, we have a really wide group of subject matter experts on the call today. So I'd be glad to let them quickly introduce themselves and give a background on what they're doing and how they see things. And then we can dive into our panel discussion.
Fantastic. I believe I'm first. So so Ryan Miller here. I head up the sales here at OSL in Hong Kong. So prior to joining and stepping into the space around about 2.5 years ago, I spent about 20 odd years in the traditional finance space. I was very fortunate to have worked in a number of different countries, from Scotland, Ireland, London, if London's a country, and then further into Asia about 15 odd years ago, where I worked in Singapore and Thailand, and now again, eventually ending up here in Hong Kong. Held a number of different roles, from flow trading, equity brokering, across a few different asset classes, again, from FX options and various others. And just a little bit on OSL. OSL is Asia's leading digital asset platform and provides products and services of the highest standard. On a corporate level, OSL is wholly owned by BC Group, which is a main board listed company here in Hong Kong, audited by Big Four. And recently, and after a significant amount of time and effort, we received approval in principle from the Hong Kong's SFC. We believe one of the first to do so. For type 1 and type 7, it's effectively dealing in securities and automated trading services, which we hope will put us in line to be the world's first and only publicly listed, licensed, insured, and audited digital asset platform.
So I believe I'm next. So this Hui here from Singapore, founder of Vision Group. We are a technology group focused on blockchain, AI, and cybersecurity. A little bit about myself: been in business for 15 years. Of that 12 years has been running my own business. Sat on 3 listed company boards, listed one of my own on the Australia Stock Exchange. Focus of Vision Group, we are very much looking at future tech and specifically technologies that usually mature in the next 3 to 6 years. So specifically, one of the areas we focus on is data. So blockchain for data trust, AI for clarity, and cybersecurity for peace of mind. Looking very much excited towards the next 1 hour or so to see what will be the next things we can uncover in the future of tech. Thank you.
Hi, I'm Caroline Boulder. I'm the CEO of BTC Markets, which is Australia's largest digital asset exchange. Kind of similar to other members of the panel, my background is in traditional finance originally. I worked for a private stockbroker in Dublin, and then moved into investment banking with the US Investment Bank in Dublin, and also in Asia. I spent about 10 plus years in Singapore, so I have a lot in common there with Riju. We can talk about Kopi C for the rest of the afternoon. But as I say, CEO of BTC Markets, Australia's largest. We have about 270,000 registered Australian clients on our platform. We've traded about 10.6 billion since our inception in 2013. So looking forward to seeing where the market goes in 2021 and beyond.
Hi everyone, my name is John Bassilios. I'm a partner at Wilcox Lawyers, and I sit across the financial services team and the general corporate commercial team. In that role, I do a lot of work in the blockchain space, particularly with digital currency exchanges, setting up crypto funds, and providing advice on the nature of a token and whether or not it's a financial product. I'm also a director of Blockchain Australia and the Foundation for International Blockchain Real Estate Expertise.
All right, my name is Travis Wright, and I'm in the U.S. It is 12 a.m. my time right now. So if I'm a little loopy, just that's why. So I'm a blockchain and emerging technology advisor and marketing strategist. and also host the one of Australia's favorite crypto podcast, Bad Crypto Podcast. And we've been doing that for about 3.5 years. We're also we're pioneering a bunch of stuff in the non-fungible token space. My co-host Joel Com and I have been in marketing and content for a lot of years. And non-fungible tokens are called NFTs. They are basically little pieces of advanced media that are on the blockchain. And we've been doing some really cool stuff. We're actually on Tuesday launching the very first nifty subscription box, which is all basically going to be monthly downloadable content that we've partnered with a bunch of different brands. So there's a lot of cool stuff going on with blockchain. We see it all from blockchain in the very beginnings, supply chain stuff. DeFi has been huge. And we think that this non-fungible token space is potentially a $1 trillion industry, and we're going in and having fun with it. So it's a pleasure to be here to chat with you all today.
Thanks very much, Travis. I look forward to discussing more about the NFT tokens in a moment. But I think it's interesting because we're here at the end of September now, and we're deep in the middle of a DeFi boom. And actually, Travis, you're the only one who mentioned the words, and the rest of us were more focused on talking about legal and regulatory topics. So maybe we start on that quickly and just go back to you, Ryan. Proudly mentioning that you're becoming, or in the process of becoming, one of the first publicly listed and licensed or marketplaces for this. So could you maybe just walk us through that, what that involves, and what does that actually mean for the status of the industry?
Yeah, so I mean, ultimately, there's been like the panelists is a broad spectrum of participants in the market. Looking at the DeFi space or something a little bit sexier, a little bit cooler from exchanges, but what OSL did, and as the founder stepped into the space in 2013, they've always had that institutional hat on. Right or wrong, they went down the angle or down the route of building a vendor or a vendor or a place in which an institution can face. So, over the last couple of years, certainly we hosted a couple of events and, at the Consensus in New York for a number of years. And we held the boring breakfast where we sat down with some very traditional players and asked them, what do you need to step into the space? What is it going to take? And subsequently went back and tried to build it. And that's where the whole license, listed, insured custody, audited vendor comes from or place comes from. So, again, we didn't necessarily go too crypto cool. We went down that route and hopefully it'll pay off. And to be honest with you, I mean, what we're seeing now, I mean, if we can get into that, and from our point of view is a big change in the institutional space, and not necessarily of why should I get into the space? What is Bitcoin? What is the AML issues? I don't believe in security tokens. How's that going to fit into the space? But now the questions are how do I get into it? How are you going to provide this to us? And really debunking a lot of the myths. We see a huge amounts of headlines over the last 2 to 3 years, significant players stepping into the space. But when you're able to get in front of one of these sort of larger institutions and stuff, and just present it in 2 minutes, almost like cryptocurrency, 2 years and 2 minutes, and just drop all the names and everything that's happened over the last 2 years, we definitely see them just taking a breath of relief that this place is, that we can offer it to them. And maybe if I can finalize, because I'm obviously going to speak a lot about the institutions and those guys getting into the space, and we don't necessarily look at retail, but we definitely think that institutions need to step into the space. We need to take it. If we want to get it to $1 trillion market cap, we need the institutions. If we want to have mass adoption, even from a retail point of view, if a large bank decides to offer it, that will open up the doors. And we saw a lot of that, and with Facebook stepping in and their 3 billion users. And then if we want to also maybe slightly reduce the volatility in the market, the gapping and the movement around, we need some institutional players sitting on a bid or an ask. So again, you'll probably hear me say institution a few times during this, but I'm also getting bored of saying it. But it really is now the time where they're going to step in.
Excellent. And Ryan, I'm very glad that we have Caroline on the call from B2C Markets, who briefly mentioned earlier the 270,000 registered retail users that they have in Australia. So, Caroline, we'd be glad to get your perspective and take on that as well.
Well, I think it's fair to kind of what Ryan has said in terms of waiting for the institutional bodies to arrive in, or parties rather, to arrive into the market. For us here in Australia, the story has been one of retail. It's been retail that has owned the growth of crypto, or digital assets as we're calling it, and that's still true to this day. I think if you kind of look at the trends of what is kind of the story of 2020, when I kind of spoke to my team at the start of this year, pre-COVID, the story was this was going to be the year of mainstream adoption, and we kind of pinned it at about June, July time when that flip was going to happen. And COVID aside, that's exactly what we've seen, particularly in terms of the type of clients that are now coming onto our platform, or more broadly, the conversations that we're having with multinationals and financial institutions, where exactly to Ryan's point, a few years ago, the conversation was one of why, and now it's a question of, well, like Ryan said, how can we get more involved in this space? But also, more importantly, how can they do it in a safe way? How can they do it in a risk-managed way? How can they do it in a way that adds value to what they currently offer from an institutional point of view? And then from a retail client point of view, the question is equally, perhaps more philosophically fired for some of our clients, where they're looking at say, Bitcoin in particular, and what it brings as a counterbalance in terms of deflationary asset. There's a lot of conversation around that at a retail level. But again, there's also, that curiosity, what is this, the next big thing? Bitcoin, as everybody on this call will know, has been around for 10 plus years, Ethereum for 5. This is a conversation that's not going anywhere. And I think here in Australia, people are now coming in and are getting more and more interested. So happening at institutional, but more significantly at retail.
Absolutely. And I mean, just in terms of that, how has it been your process navigating through, I suppose, obviously as the market leader in Australia, it's a relatively straightforward position that you have, but navigating the global competition for the products that you're offering, which, if it is more retail focused and BTC denominated trading volume, I mean, how do you navigate through that at the moment, and what's been the competitive landscape for that over the last 12 months?
I don't think for anyone that, you don't take your position for granted in any marketplace. And I think when you're at the top of the jungle, it means there's only one way to go. So you have to keep driving harder to stay where you are. And here in Australia, we've seen a lot more international competitors come into the space, which is great. I always welcome competition. It's how, the kind of, but levels rise for everybody when you have that competitive edge. But for us, and I think this is going to be a driver for not just our own exchange, but other exchanges here in Australia, I think the regulatory environment that we sit in and the regulatory trends that we're seeing worldwide are going to be the big influencer. And for me, as head of an exchange, the kind of view that I take on this is, yes, one part of this is about the products and services that we offer, but because we're in such a new and nascent industry, I also have to keep a very close eye on what's happening from a regulatory point of view. And here in Australia, being a spot exchange, that's fine. We sit kind of outside of financial regulation per se, but when we start looking into some of the other offerings, such as around derivative trading or stable coins, etc., that's when things get a little more kind of compliance and risk kind of heavy, I suppose, if you like, when we have to talk to our regulators about that. So there's a lot of issues that are here at play that we have to examine.
Absolutely, and we'd definitely like to come back to the topic of derivatives and stable coins later, because noticing quite an uptick in M&A activity around these topics as well. So we're glad to go to that. But in the meanwhile, I mean, I think it's probably a good segue over to you, John, from the more legal perspective. And one of the other topics that we often hear more about, central bank digital currencies, and much of the, let's say, activities and initiatives being driven by Facebook and the Libra consortium, let's say. I mean, how do you see that evolving? What does that really represent, and what are the implications of this from let's say top of the pyramid perspective?
I think you've mentioned central bank digital currencies and Facebook in the one breath there.
Too close together, huh?
Well, I'm not sure. I actually think that what each of them may do are quite different, very different propositions. One is a government-issued currency, and one is effectively a stable coin, and I think they're quite very different beasts. I feel that the way of the future is that all central banks are probably going to have a central bank digital currency in one way, shape, or form. I know that there's a website that kind of tracks where various central banks are at with their thinking, and about 85% of the Earth's land mass is in some way, shape or form doing research development or a pilot. Here in Australia, the Reserve Bank of Australia has said that they are considering a wholesale central bank digital currency, and I think a lot of them are focusing on wholesale because there's probably more of a need there. And Australian RBA specifically says that they don't really see a need for it in the retail space because of other alternatives which are just as good. So recently in Australia, we've had the national payments platform being launched, which pretty much provides for instantaneous payments. So therefore, that together with our existing electronic payment system reduces the need for it in the retail space. I do see though that there are some benefits and detriments to having a central bank digital currency. The benefits probably more so accrue to the government than they do to the user in terms of, being able to collect taxes in order to be able to monitor anti-money laundering and being able to track people's spending for anti-money laundering and other financial crimes. It's unlikely that any central bank digital currency is going to be decentralized. It's likely to be centralized. Therefore, there's probably going to be greater visibility by governments over our spending habits with respect to whatever we spend our money on, and that's probably not such a good thing. And there are other people who take a position that, and people probably use the example of China for this, and I don't think it's fair to just use China as it, but if the government doesn't like what you're doing or saying, could they potentially effectively put a stop on a retail account if it's all kind of through a central bank digital currency? They're all questions and issues that kind of need to be considered, but I don't think I would put the central bank digital currencies in the same basket as a stable coin.
Mm-hmm. Absolutely. And I mean, in terms of the next steps there, I mean, what are kind of the signs that you're looking for to see that this is something, you mentioned China, of course, which has gone very public and announced many of the, let's say, attributes around what they're doing. There are, deep conversations and white papers being released by other, let's say, tier 1 jurisdictions as well. In terms of bringing that to life, though, and having this on a day-to-day basis, you mentioned it might not even be a good thing, so maybe we don't want to wait for it. But what is the kind of the roadmap and signs of life that you would expect to see over the next 12, 24 months that make that relevant?
Look, it's really difficult to say, but there's probably 4 different stages that you could be with respect to central bank digital currency. So there's research, there's development, there's pilot, and there's launch. And not many people have reached the pilot stage, as I understand it. I believe that it's only kind of China, Ukraine, and Sweden, I think, have kind of launched a pilot. Everyone else is sort of still doing research and development. I don't think it's something that's sort of just around the corner, and there's probably going to be issues of, I expect, some sort of interoperability issues associated with central bank digital currencies, that you'd want some sort of interoperability for wallets or whatever, however they're going to be held. But we'll see.
Absolutely. No, good. So I think, something that maybe is just around the corner or we're well and truly in the middle of the corner is really the whole decentralized finance and DeFi topic. And this has really become one of the most prominent trends of the year, or at least the last few months in particular. So Hui-Ji, I mean, over to you. I'd like to get your take on this. I mean, is this a positive development? Do you think this is something that's leading towards mainstream adoption, or is this just the next hype cycle that we're going through at the moment in the whole industry?
Yeah, I think it's a really interesting time, right? There's so much movement and advancements very much in the finance industry. I guess from the traditional finance space, digital banking, virtual banking, it's one of the hottest things around. Basically almost on a global scale. From Hong Kong side, they've issued about 8 different licenses. On Singapore, issuing 5. I believe in Australia, they came out with a 3rd level in terms of banking licenses as well. And very much in the blockchain space, I guess that's quite a number of movements within the space. especially from a government perspective. For China, it's DCP as well. It's BSN for Blockchain Services Network. And become very much the crypto space where things change so very, very quickly. I guess DeFi is really one of the key things that people are looking at, all the way from, it's definitely more than just yield mining or so-called liquidity mining or yield farming as well. But I guess all this eventually will sort of converge to a certain extent, right? Things that are fads will last for a certain period of time, and things that eventually has actual value and impact towards the market itself will continue to roll, very much like an innovation cycle where there's always early adopters and eventually there's mass adopters as well. What I really believe and foresee very much in the future, it's a convergence of the best of very much what we term as the traditional, the blockchain, as well as the crypto space very much coming together. One of the areas, of course, from a technology perspective, and the other area very much from the other benefits that so-called the mass adoption is actually adopting. And once a mass group and hit a tipping point of people adopting it, that's when the larger institutions might actually look at it and say, hey, maybe we should start joining in and seeing what might be opportunities that we can actually start to look into this as well. Even from a Singapore perspective, we already have started listing Bitcoin, Ethereum on the indexes on our Singapore Stock Exchange. And very much looking forward from a so-called government centralized bank, so-called currency perspective. We have Singapore UBIN as well that we've been running over the last 5 years or so, and just looking at when we should actually turn on the switch to be able to connect towards this entire ecosystem. So I believe that very much the future is hard to tell, but importantly, it's what will be the small bits and parts that we're able to put together that will really benefit so-called the different masses. And eventually, when we combine that together, it's going to be a hybrid of what we have from a traditional blockchain or crypto space.
Absolutely. And I'm glad we do have someone also, from the US on the call. So Travis, it would be great to get your take on how you're seeing the DeFi boom from your perspective there and what that means in practice.
Yeah, well, the whole DeFi thing has been really fascinating to watch. It's literally grown 10x in the last 3 months. I mean, this thing is exploding, and a lot of different projects are popping up that you've never even heard of. And then the next thing you know, they're in the top 20 in market cap of blockchain projects. You're like, what? Where did Polkadot come from? Where did Yearn Finance come from? Like, these things are just popping up, and you're like, wow, look at this. Look at the market cap on this thing now. It's over $1 billion. And people are locking up a lot of cryptocurrency inside these Ethereum smart contracts. And then it's like if you're converting them for another currency that you're then sort of a stable coin that you're then able to use out in the real world, but you're able to hold back and not actually sell your crypto. You're able to hold it, and then you pay back the loan whenever you want to pay back the loan. So it becomes like a decentralized bank loan system that you become your own bank by locking up your own crypto and then getting assets you can spend now, and then you pay them back whenever. So what I think is crazy about it is that, whenever this started, the price of Ethereum was kind of low, or at least relative to where its all-time high was. And then you started seeing people putting money in, locking up Ethereum in these smart contracts. And then the price of Ethereum was going up, and they basically borrowed a little bit of money and then paid that back instead of selling their Ethereum. So now they get to still keep their Ethereum. That's still increasing in value. So on the surface, it is really interesting. There's a lot of people who's made a lot of money on this, but we're talking about regulations and stuff here on this thing. So there's no protections. There's no central authority when it comes to decentralized finance. It's decentralized. There's no central agent. There's no regulations. There's no institutions that's coming in. You become the institutions. So what's happening is, and over time, there's going to be a big disruption in these institutions where those institutions are going to become irrelevant. We're not going to need them anymore because we have smart contracts and we have all this decentralized finance stuff and blockchain. Eventually, banks are going to become irrelevant unless they're going to be a holding company for people's crypto keys. So there's a lot of people who are freaking out. They're trying to figure out where they fit in, and a lot of them are not going to fit in. They're going to become the way of the dinosaur because technology is surpassing them. They want to go slowly. They want to drag their feet. They got to wait and wait and wait. And this space doesn't wait. This space moves faster than anything. and there's no regulatory oversight on that. So that's scary to some people. They're like, oh my God, I gotta have a regulatory oversight. If I don't have that, then what? And there's no protections. It's a very risky game. The risks are very risky and the rewards can be very high. So you got to be careful in that space. And it's still very sort of tech. There's a lot of tech complexities with it. Like, it's not just easy to go and, oh, you get your Ethereum account, you get some, switch it over, then you go to Uniswap and you do all, like, people just go, what? So it's confusing to a lot of people, but I tell you what, I mean, it's going to be interesting to keep an eye on. But think of this. There's only been 150,000 people so far who've locked stuff up in DeFi. Only 150,000 people in a world of 8 billion people. So still very small, but the potential is really big.
Absolutely.
I might just add to that if I could. I see DeFi as a bit like ICOs in the early days, that initially, the regulators didn't know anything about them, didn't do anything about them, and they were kind of playing catch up towards the end of the ICO craze. And I feel that there's scope for that also in DeFi, even though it's a bit harder because it's decentralized. But there was a case out of the US where someone purported to operate a decentralized exchange, and they went after the person who was promoting it as the operator of the exchange. So DeFi is at risk also of the regulators finally catching up with it in time by going after those who either, wrote up the source code hard because they're kind of decentralized, or where there's a centralized companies that have kind of brought together the people to actually develop the relevant protocols. But then also people who are promoting it, because it's still potentially a derivative or some other form of financial product. So I think it's kind of watch this space from a regulatory perspective, even though, it's a reasonable argument to make that it's not regulated. We'll wait and see until it gets a bit bigger and the regulators will want to get involved.
Absolutely. And I mean, Caroline, as the operator of the, let's say, the leading exchange in Australia, right? I mean, what is the implication of this for you, and how actively involved in DeFi are you guys getting on your side?
Yeah, no, DeFi for us is a really exciting trend, and kind of just to the point that John has made there too. I mean, I'm kind of in the game long enough. I remember when the ICO craze started and what was kind of the fever pitch that was developed around that. And just kind of with that point, talk about the regulators catching up. The European Commission brought out at the end of last week their proposed digital finance strategy, which makes direct reference actually to ICOs and SCOs as part of that. So, I mean, yes, there's a bit of a learning curve. It's probably about 4 or 5 years bit today for the ICO craze, but they do catch up. And actually, Europe is currently what I would consider to be the leading light in terms of regulatory approaches towards crypto. As part of that kind of legislation that they brought out last week, the European Parliament, equally their research service, brought out the EDA, an added value assessment that put the use of digital assets within the financial services of the EU, kind of conservative estimate of about 30 billion US to 66 billion US additional value that it can add with its adoption. So the piece of regulation and the strategy that the European Commission is putting forward from a regulatory point of view is part of that. And they have got some kind of handy little acronymed markets in crypto assets, which is MICA, and then also a digital operability, what is it? See, exactly, it's such a catchphrase, you can't even get The whole point being is that they're now taking on that strategic approach towards digital assets. They're looking towards regulating crypto. They put forward a framework for defining crypto assets that kind of are sitting outside of MiFID already, and particularly in stable coins. They directly address stable coins. They bucketed those into 2 separate different types of asset classes within that. Really interesting. I mean, it's a massive piece of legislation that they're putting forward, but their approach is to say that they're going to regulate the innovation in rather than regulate it out. And I think that's probably the best and most pragmatic approach, exactly as John's described and exactly as Travis has mentioned there, where you've got these trends with ICOs, STOs, and now with DeFi. It's it's beholden to these regulators to kind of put these positions forward to protect and take, exactly as Travis described, that risk that's there. For me as head of an exchange, I also welcome these regulations because we've been sitting in something of an unknown area, and this whole question around what is digital assets and are they going to be around for the longer term, and kind of the institutional play that Ryan spoke about. But with the regulation that's come out of the EU, with the regulation that's being proposed in front of the US House of Congress, there's two very interesting pieces that are in there. With the FAT of travel rule, all of these different major pieces of legislation coming out of major financial centers does one thing. It puts crypto and crypto assets on the same par as established financial institutions. And for somebody like myself, who's the head of an exchange, this is exactly what we want and exactly what we need. A, for consumer risk and protections around that, but also so that institutional players can now come into the space and feel comfortable in this space. But also it kind of rightly recognizes exactly what digital assets are about. It's not kind of the Wild West that perhaps it may have been perceived to have been even 10 years ago, 5 years ago. That's not what the world that we're in now. This is the world that quite rightly deserves to be recognized on an equal playing field, rather, with financial institutions and existing financial services.
Absolutely, Caroline. I couldn't agree more, and I think that's really, based in Switzerland as well. So on top of the European Union legislation that came through, we also locally here passed, let's say, the digital assets initiative locally as well last week, which came to light. So as you say, it's really at that kind of intersection now where tier one jurisdictions and capital market centers have been able to get together, get organized, and come with an approach, which is always good for market participants. And Ryan, I take it over to you then to maybe give your perspective on how the institutional space evolves around that and what that looks like from your perspective.
Sure. So following on from the STO side of things, our license, the approval in principle is effectively dealing in, or type 1 dealing in securities. And therefore an STO, a security token offering product, we will be required to offer from day one, which as it stands today is illegal. So no security tokens can be traded in Hong Kong, and they're doing obviously a 180, and it will be a requirement. And as with most regulators, they will step into the space slowly but surely. We can offer, should we receive the full license, then we'll only be able to provide this to professional investors in Hong Kong, so no real retail. And again, there's a number of different restrictions around that security offering that the SFC have placed. So, as the market develops, we really see it as hopefully as a real venue in which you can launch an STO, and then hopefully down the road it'll be a place where we can have almost like a micro IPO where it really is complementary to the current capital markets. And what I mean by that is we had the ICOs, which was effectively a white paper, and you could raise $50 million, and that obviously led to a lot of people losing a lot of money. And then you have the IPO world, where it's give or take $15 million to list, that you have to have literally lying around to do an initial public offering. And that STO is almost like a micro IPO. It just sits right in the middle there, where a small to medium-sized enterprise is effectively making $1 million a year or revenue and is looking to raise that $5, $10, $50 million can access capital markets. But not only from the issuance point of view, but also from the investor point of view. Most of us don't have access to initial, we effectively see and have access to one of these early stage investments when it's an IPO stage, which is way too late, and a lot of money has been taken off the table already. So again, from an issuer's point of view, it's fantastic in STO, and it has that regulation around it. As we've seen, it doesn't have the full regulation and all the bells and whistles, but it gives you the peace of mind that you step into the space. So there is the consumer protection, but it really is it's super beneficial for both the investor and the issuer. We definitely see it, a huge sort of step into the capital markets and this huge drive towards a cashless society and of digital payments and broader adoption. We see it, obviously, the central bank digital currencies and a number of other, products and everything's basically built around the blockchain, the immutability, the shared ledger, the security. And I think it can streamline these products and services. And maybe if I can finalize, ultimately, again, what the market's been trying to do is remove barriers to entry, regulatory clarity, wider acceptance, product offerings, not only from an STO and maybe even down the road, hopefully in a DeFi space and et cetera, but just in the pure spot market. And even in the last couple of years, you went spot market. Now you have a futures market, you have an options market, you have a coin borrow lending market, mostly around the BTC area, but there's liquidity around that. And, you know, that's something that the market didn't have and would have saved the ICO guys incredible amounts of money. If they were able to raise 50 million bucks at 20,000 and able to do some downside protection on an options or a yielding product, a lot of these projects may have survived. So the traditional world, I think what most of us are trying to do is find those key aspects, the number one advantages, the good stuff affected from the traditional world, and just duplicate it improve on it, should I say, and duplicate it into the world. You know, generating alpha from asset managers, wealth managers, asset allocators, they are effectively, clients are knocking on their door. I want to have 1 to 5% of my assets in crypto space, but I don't necessarily want to do it through, you know, with a brand new asset class, with a brand new provider, with a brand new custodian. You know, it's a few too many steps for them, you know, especially if they want to dip it in. So that's where that sort of joint and collaboration with a top tier name brand, you provide something on the side, use their name, they're using the name, their client base, and you provide it on the side there. So yeah, I mean, it's definitely, we believe obviously that the future of the capital markets is in the digital space.
If I may interrupt, kind of add on to that point, kind of on the back of that European regulation that they're bringing out, with their regulating around the white paper, their regulation through to STOs, they're doing a full kind of overhaul of the digital capital markets, including a pilot program around DLT and market infrastructure for trading and settlement. They're doing a complete overhaul, which is in support of exactly the case that Ryan is describing. They've woken up and realized that this is now an inevitability. And so they're now regulating for that inevitability. And the reason why I think it's important is that because that is a roadmap for where the rest of the world is going to go. Like if you're looking at the fad of travel rule, it only takes a handful of countries to introduce it so that it affects all of us. And I think it's going to be the same with this kind of regulation that we're seeing coming out of Europe and lastly the US. The reason again why I cite the European offering is because it's been the most comprehensive and kind of thought all the way through. But I would agree with exactly the future that Ryan is describing and the use case that Ryan is describing. I think it's an inevitability.
Yeah, I think as well, I mean, if I could just add, I mean, the FATF, the travel rules, is actually, it goes against, of course, the Bitcoin, you know, and the somewhat libertarian view of Bitcoin while it was founded. So there is always going to be, and I'm sure again, like we've all discussed, there is still that crypto cool industry, the guys that want to do DeFi, they want to have their projects on the side. They don't want necessarily somebody with an oversight of them. But, you know, there is some sort of protection. So it's trying to find that perfect balance with the travel rule and how much that influences the speed in which we transact. You know, if you place that in, you know, you're trying to add that into the current structure, how fast does this, you know, a 15-minute transfer now take? Is it going to take an hour? It's going to take 2. But, you know, what with that and coin purity, you know, when you describe coin purity to an institution, it blows their mind, you know, because there is, as I mentioned, so many times we have to debunk these myths, and crypto unfortunately has a little bit of a, you know, a personality, or it's got a sort of something around it where it's AML is the biggest issue. And when you say, look, I can go coin purity to the Genesis block on these 5 Bitcoin, where if you send me $5,000, I can go back 1 step. You get a little more granular and explain a little bit further, but they take it on board, and it really starts to give this sort of sigh of relief within the room. And they say, okay, let's go. Let's see what you guys have got, and hopefully it'll push forward.
But I think that's not kind of breaking the narrative of how the industry started. The origin story, like the myth building of where it began, that a lot of the kind of other benefits like that transparency, perhaps that story wasn't sold as well or as effectively as some of the other more libertarian aspects of kind of Bitcoin as a market leader. And that's kind of beholden on all of us in the industry to take that educational step further and kind of, you know, change the story that has kind of dominated the headlines around it. But I think that is the case, to be honest. I do think that story has changed.
Yeah, so just one more thing, I guess, on the DeFi space. I mean, I think that although outside regulators need to perhaps have to step in. What I've also seen is that, the market itself is taking a big step towards self-regulation. People are watching these DeFi guys and they are, really calling them out if they decide to run away with 13 million bucks or whatever. But, they really are looking and saying, look, we don't want to have that ICO, that's what we're known for, or we're known for AML. They want these things to work. I'm hopeful that in the DeFi space and other stuff, anything that does happen will be a little bit more of just a teething issue. Somebody did hack into this issue within a smart contract, but not necessarily somebody just effectively stealing money. So I think there's been a bit of a change in the market, and they really want this thing, everything to work. And they know as soon as they get more people involved, more trust in the market, then it'll grow bigger.
And I just want to quickly go back to one of the things you mentioned earlier, Ryan, around the liquidity provision or support of smaller, medium-sized enterprises wishing to issue public stock. And I think for a lot of us on this panel have an affiliation to Australia, can really appreciate. I mean, the ASX is one of the highest rate of micro cap listings in the world from a tier 1 jurisdiction, let's say. So I think it's a concept that we at least are very familiar with when we look at what is public markets on the equity capital market side. And BG, I mean, you've certainly taken companies public and a board member of listed companies. I mean, what is your perspective on that? Is this really a good development? And what are the main pros and cons of actually having that level of liquidity provision on early stage stock?
Liquidity is always good. And I guess the thing is that, even we talk about listed companies, some listed companies might not have fantastic liquidity either. So liquidity is always good. Whether it's at early stage or mid stage or late stage, I guess that's where companies are really able to take the early forms of funding to really build the value proposition so that they're able to return back to their different investors over a longer period of time or longer scale, so-called the earnings, and share their earnings out towards the people who have very much belief in their business model. So I guess the entire introduction of this, any means to be able to help and support small, medium enterprises and business, and if it's able to utilize the funds responsibly, I believe that's something that's really going to assist the industry itself.
Yeah, very good. Okay, good. And then I think now's probably a good transition over to you, Travis, and the whole NFT topic. So I think for those of people who are listening and maybe don't have such a good overview and understanding of non-fungible tokens and what that looks like, it'd be great if you could just give a few words on what that is. And you mentioned the nifty subscription box, so keen to hear more about what it is you're working on concretely.
Right on. Well, first of all, I guess to understand non-fungible tokens, you got to understand what is a fungible token. And a fungible token is basically something that's interchangeable with another one. So if you give me a US dollar and I give you back a different US dollar, doesn't matter. They're the same. They're interchangeable. You give me some Ethereum, I'll send you the back of some different Ethereum, but they're interchangeable. But a non-fungible token would be something that's unique. Like imagine a concert ticket. Like you got a front row ticket, somebody wants to trade you a back row ticket. That ain't gonna happen. That's not good. Those are not interchangeable. That's not a good value for you. So think about this. Non-fungible tokens, really, they're digital items that are backed on the blockchain with ownership. So here's a digital item that you own. This could be collectibles. This could be maybe game items. So imagine you're playing Fortnite and you want to sell your skin that you're playing, that you have, and you don't want it anymore. You want to sell it. Well, now you could literally sell it on a secondary market. You can't yet because obviously Fortnite's not blockchain related, but this is an example. Selling in-game items on a blockchain and then buying other stuff you want for other games. That's going to be something that's going to be huge. Digital art. Artists are making some ridiculous amounts of money. There was one piece of art sold on Nifty Gateway, digital piece of art, one of one, sold for $55,000. And so there's some really amazing artists out there that are creating digital art. And some people might go, why would I want to have something digital that I could just look on my screen? Well, exactly. You could have a screen on your wall that's showcasing your unique digital assets that you own. Domain names and even ownership records for physical assets can be an NFT. Now, what we started doing, I don't know if you guys heard of CryptoKitties. CryptoKitties happened back in like 2017, 2018. And that was kind of the door that opened Pandora's box around these digital collectibles and NFTs. That was with the Ethereum, I believe, 721 standard. And there's also Engine, which is on Ethereum. And there's some other ones that are built on Ethereum. And Ethereum has such high gas prices right now because of DeFi that it's almost, if you're buying a cheap item on an Ethereum NFT, you're going to pay probably 4 or 5 times that price in gas fees. So Ethereum is really not a great platform for NFTs. However, Wax is a protocol that is built specifically for NFTs. And one thing we did in early in the year and actually late last year was we started doing these proof of attendance things. If we go to an event and people met us, we wanted to give them they could scan a QR code to get a little NFT from us. Or if you listen to our podcast, we would tell you a link you could go to that was active for 72 hours only, and then you could type in your address and your email or whatever, and we would send you a non-fungible token that proved that you listened to our show. Maybe you collect 5 of them and we'll send you a sticker. You collect 20 of them and then maybe you get a shirt. So there could be some loyalty plays in there. So we took that, and then we had an idea to create a digital collectible set around blockchain influencers, people who have impacted the industry of blockchain, like Satoshi Nakamoto, and then some of the founders of amazing projects like Ethereum and Litecoin, and some of these other amazing people who've just helped move the industry forward. And we created a thing called Blockchain Heroes. And Blockchain Heroes, a digital collectible card. We created 50 different cards and worked with some artists. And then I got some Photoshop skills, and we ended up creating this set, 9 different variations of cards. And we sold 125,000 cards in less than 15 minutes. William Shatner, the Captain Kirk guy, he did a deal on Wax as well and created a digital collectible set of images from his life. He sold out over 100,000 cards in 9 minutes. And then there's the secondary market, which is so important. What's cool about a secondary market with NFTs is it's built on smart contracts. And so every time your digital asset sells again on the secondary market, depending on how much money or what percentage of that sale that you program into the smart contract, that original artist can get paid time and time and time again. Topps recently released a version of their digital Garbage Pail Kids, and they sold out, and they sold 110,000 cards. But then on the secondary market, they've made way more money on the secondary market because every time one of those cards gets sold, Topps get 8% back. Every time. So if that card sells 100 times, they're getting 8% every time that card sells. And so artists are really liking this. There's going to be musicians that are coming in, bands that'll be doing this stuff, a lot of great artists, just creating these fun digital collectibles that deliver delight to their fans. And they're all based on blockchain, and they all have value. And there's going to be some DeFi plays where you're going to take your NFT collection, how much is it worth? And then there's going to be some DeFi plays playing into that. So there's a whole lot of stuff going on as this whole space evolves, and it's really fun to be playing in it. And as I mentioned early on, we've created a huge audience on Wax. And so on Tuesday, we decided to launch the Nifty Box, which is a subscription thing, kind of like a Loot Crate. Literally, whenever you're a small organization and you're not bound by institutions and stuff, we had the idea we had the idea a couple months ago, but we decided to do it this past Monday. I literally built the website on Tuesday. We went through the process. We then collected 15 different partners who are going to add collectibles to this thing. We built this all out in a week. Like, big businesses can't do anything like that. You can't be nimble in the space because there's such a web of regulations. But we're setting up these collectibles that are worth whatever people on the secondary market choose to pay for them. And it's a space worth watching. There's been a lot of people saying that this industry, digital collectibles and game items and also, it's going to be $1 trillion industry down the road. So this is something that is different than, some of the institutional stuff. It's different than the finance stuff. It's just another cool application of blockchain that seems to be gaining some pretty big traction.
Absolutely. And John, maybe if you have any comments or perspectives there from maybe a legal regulatory side, I mean, how do you see that evolving with the whole NFT space? And is that something that's also high on the agenda for people looking at that from a regulatory perspective?
It's not something that I've seen come across any of the regulators' pronouncements. However, in Australia, we have an interesting concept of what constitutes a financial product. And one of the limbs for what constitutes a financial product is a facility through which someone makes a financial investment. And I can see that if the regulator wanted to make an argument that these collectibles are a financial investment because someone is putting their money into it for the purposes of making money, they could actually regulate it. However, I don't think that that would be high on the agenda for the regulators. I think their focus is probably going to be more so in the security token, stable coin, and DeFi space rather than the collectibles.
Yeah, it's like art. I mean, if you buy a Picasso painting and you love it and you put it on your wall, I mean, I don't know what the tax implications are on something like that, but it's like they are collectibles. You know, people enjoy collecting things, and what's cool about it is you can take them everywhere you go because you have a smartphone for the most part. So people have what I've noticed about is that when people are opening up these packs and they're getting random things, it just the delight that they have whenever they open up a cool random like legendary card that has this digital scarcity. Maybe there's only one. The excitement that it brings is really fun. That's one of the things we really like. And our North Star is to really deliver delight and happiness to the people that we're working with. We do that with our podcast and with NFTs and every project that we work on. So you can bring joy to others, you know what? And that's a good thing.
Excellent, guys. So look, on that note, I'd like to then wrap up and just say, thank you very much for all of your contributions to our discussions today. I think we've covered several of the interesting areas I think we're all equally excited about. I mean, everything from the evolving regulatory landscape, driven around the world. DeFi, of course, is a topic which, as you touched on, Travis, going from 150,000 people today to what could be, many X bigger than that, as well as the whole non-fungible tokens, which really looks at some of the non-financial use cases of blockchain. So I think this is really where everyone has a unique insight, and especially as we move towards, I think what we all agree, and certainly Ryan, you've positioned very well, is the institutional adoption and acceptance of our industry and what we're doing in it. I think these are certainly exciting times to be doing what we're all doing and actively involved in this space. And just before we do wrap up, it'd be great if you could each just share final closing sentence and maybe what the best way for people watching to get in touch with you is, and maybe they can follow up with you after the conversation. I think you're on mute, Ryan, but you're still on mute.
My apologies. Yeah, so ultimately, we, as I mentioned at the beginning, if our target audience is any sort of traditional player that's looking to get into the space. It's something that we built for and we believe, but we are super supportive. I mean, the firm, as I mentioned, the founder started in 2013, and the company has just over 170 people here, and there's some real blockchain enthusiasts, and there's some of the regulatory guys. So we're just building for the future, and we're also looking and trying to, we also want to have that, that sharpness in terms of the ability to offer the security tokens, but also if there's something that's, that's new to the space and we can get into in terms of DeFi, we would be fantastic, but we will just follow the way in which the regulatory landscape goes and take the baby steps. In terms of getting in touch, ryan.miller@osl.com, just pop me an email. And yeah, we can get in touch. And of course, thanks everybody for joining. Much appreciated. Super, super interesting, especially on the NFT side. I wasn't actually too familiar with that.
Great. Hui, would you like as well just to put in a word?
Yeah, so I guess as a closing note, it's always good to get in early and explore early. Don't go in with everything you have, but I mean, the greatest opportunities are always the ones that are innovative and things that you're able to have a trending line on. So I guess anything that's innovative, anything that's new, always keep a watch out. You never know what's going to be a huge change or what's going to be a huge break as well. So I guess that's one of the key things to actually take note of and find out what's always going on around the space. In areas of getting in touch, you can find me on LinkedIn at Hui Tie Lim. I guess that's the best way. Great session. Enjoyed the discussion with everyone.
Well, I suppose for my closing remarks, for anyone who's kind of on the outside looking in and is questioning, is this the time to get involved? I would say definitely. I think that we've reached over that kind of tipping point, as I said at the start, and this is very much now a space that everyone can play in. Obviously, kind of suiting to their own investment strategies and their own approach to the space. But I think it's time to kind of get involved. Personally, I can be found on LinkedIn, Caroline Boulder, but my email address is caroline.boulder@btcmarkets.net. You can find me on there.
Okay, for my closing comments, I'll just say, I guess, that digital assets is a very exciting and dynamic space. I will be looking into, with interest, the release by in Europe in relation to their regulation of digital assets. I think it's fantastic for the industry. I think that they're kind of being trailblazers and there'll be a lot of followers. And yeah, it's an exciting space.
Well, first of all, thank you each and every one of you for participating. This is fun. For those of you who are listening or tuning in, is just, think about this. This is one of the things that really sold me on blockchain and cryptocurrency and why it's so important. Is like, come on, we all have one of these smartphones, and you can be your own bank and you can access money in seconds and convert it, and especially with exchanges, and send it to your bank. It's becoming so easy to use. I have a crypto card that's like, I pretty much use it for everything now. I'm not even using credit cards. I literally have some Bitcoin on here. I'll top up my card. I'll put $500 on that I can just use on my credit card. So it's like, I'm pretty much using crypto all the time. And, I think for the most part, been paid in crypto for the greater part of the last 3 years. And so you can truly, say that it's coming. There's a lot of big brands like MasterCard and Visa that are doing blockchain stuff. PayPal's getting ready to start accepting cryptocurrency. I mean, this is a big thing. And then blockchain as a whole is just such an interesting technology that in a lot of ways can help free up society and eliminate a lot of the centralized control mechanisms within society that we don't necessarily enjoy. And, it's a fun space to keep an eye on. If you're interested and you want to learn, we do a news show every week, Bad Crypto. badcryptopodcast.com. We actually just did an interview with Tim Draper and Brock Pierce talking about the state of the world and how Brock Pierce is running for president. That's episode 448 that we just put out. So, if you're interested, listen, and just pay attention to it, because digital currency is coming, whether you like it or not. It's on the way, and you might want to figure it out sooner than later.
So I'm surprised it took us this long to get some US politics discussions going, but Travis, I think you've summed up the sentiment perfectly well there. So on that note, I will leave it there and just say thank you once again, especially to Chris and WI, Steve and Marta for organizing this panel and putting it together. I highly appreciate the opportunity to connect with the people on the call today, and for everyone watching. Thank you for your time. We do look forward to keeping in touch, and don't hesitate to reach out if any further questions down the road. Thank you.